Do you know what a mortgage is? Well, let's dive right into it and decode this financial term together. Imagine you've set your heart on a beautiful house, maybe it's got a pretty little garden or it's in your favorite neighborhood, but there's a twist in the story. You don't have enough money to buy it outright. So what do? You might think, well, I guess I can't buy that house, but there's another option. This is where a mortgage comes into play. A mortgage is basically a special kind of loan you can get specifically for buying property like a house or a piece of land. Here's how it works. You go to a bank or another lender and say, "Hey, I want to buy this house, but I don't have enough money. Can you lend me some?" Now, the bank isn't going to just give you the money. They want to make sure they'll get their money back. So they give you the money to buy the house, but the house itself serves as collateral. This means if you can't pay back the money, the bank can take the house. Now you might think, great, I've got the money, I can buy the house. But remember, this is a loan, and like all loans, you have to pay it back little by little over a certain period of time. And here's the catch. You don't just pay back what you borrowed, you also pay a bit of extra money called interest. This is the cost of borrowing the money. Interest is like the bank's way of saying, thanks for letting us lend you money. It's their reward, their slice of the pie. And the longer it takes for you to pay back the loan, the more slices of pie the bank gets. So a mortgage is like a long-term loan to buy a house, with a bit of extra cost called interest. It's a vital part of the financial world, and understanding it can help you make smarter decisions about your money in the future. Ever heard of a savings account? Well, let's dive right into it. A savings account, in simplest terms, is a secure place where you can keep your hard-earned money, and that place is usually a bank or a credit union. Think of it like a digital piggy bank that you can't accidentally drop and shatter into a million pieces. But here's where it gets really interesting. Unlike your ceramic piggy bank at home, a savings account doesn't just hold your money, it helps your money grow. How, you ask? Well, banks give you a little extra money for keeping your money with them. This extra money is what we call interest. Now you might be wondering, why would banks give me extra money? What's in it for them? Great question. Banks use the money you keep in your savings account to fund loans for other customers. In return for using your money, they pay you interest. Interest is like a thank you gift from the bank. And the best part? You don't have to do anything at all. Just sit back and watch your money grow. The rate at which your money grows, or the interest rate, varies from bank to bank. Some banks offer a higher interest rate than others, so it might be a good idea to shop around and find the best deal. But remember, a savings account is not designed for regular transactions like a checking account. It's meant to be a safe space for your money to grow over time. So, while you can withdraw money from your savings account, it's best to let it sit and accumulate interest. And there you have it. That's what a savings account is all about. It's a secure place to store your money. It's a way for your money to grow through interest. And it's a smart step towards financial security. So a savings account is like a piggy bank in the bank, where your money grows over time. Do you know what a credit card is? Well, let's dive right in and explore this fascinating piece of plastic that's more than what meets the eye. A credit card, quite simply, is a card issued by a bank or a financial institution that allows you to borrow funds to make purchases. Think of it as a mini loan you can take out whenever you'd like to buy something, whether it's a new bicycle, a video game, or even a tasty ice cream sundae. You can use a credit card to pay for these items even if you don't have the money in your pocket right at that moment. But remember, a credit card isn't a magic money-making card. It's not creating money out of thin air. Instead, it's a tool that allows you to borrow money from the bank. The key word here is borrow. When you use a credit card, you're making a promise to the bank that you'll pay back the money you've spent. And this is where things get interesting. You see, the bank doesn't just let you borrow money for free. They charge you a little extra for the convenience, and this extra amount is called interest. Interest is like a thank you gift you give to the bank for letting you borrow their money. Imagine you borrow $10 from a friend, and when you pay them back, you give them an extra dollar as a thank you gesture. That extra dollar is like the interest you pay to the bank. But be careful, if you don't pay back the money you borrowed from the bank on time, the interest can add up, and you might end up owing a lot more than you initially borrowed. So, while a credit card can be a helpful tool, it's important to use it wisely. It's not free money, but a responsibility. It's like a trusty steed that can take you far, but only if you take good care of it. So, a credit card is like borrowing money from the bank to buy things now and paying them back later with a bit of extra cost. Let's recap what we've learned today. We started our journey with mortgages, those big, intimidating loans that aren't as scary as they seem. They're simply loans that help us buy homes, and we pay them back over time, often many years. Next, we delved into the world of savings accounts. These are safe places where our money can grow, even while we sleep. They're like magical piggy banks that give us more money the longer we leave our coins inside. Finally, we explored the realm of credit cards. Remember, they're more than just pieces of plastic. They're tools that allow us to borrow money for purchases, and as long as we're responsible, they can be our friends, not our foes. From mortgages to savings accounts and credit cards, each of these terms helps us manage and understand our money better. Remember, understanding money and how it works is an important skill, so keep learning and growing your money knowledge.